Brenda Butner. This is Bulls and Bears. And we're going to have more on that huge Microsoft Yahoo deal. Did you hear about that? In a few minutes. But first, Super Tuesday, 24 states, 2,000 plus delegates. A big day for the candidates indeed. But how could it be an even bigger day for your stocks? Let's find out in the trading pit. And here they are, the Bulls and Bears this week. Gary B. Smith, Toby Smith, Scott Blyer, along with Peter Schiff, author of Crash Proof and president of Euro Pacific Capital. And look who's back. Bob Olstein, president of the Olstein Funds. Pat Dorsey returns next week, we promise. All right, Gary B., let's get right to it. Super Tuesday, a super day for the market?
Absolutely. A huge day. Look, I think we know it's going to, at this point, you know, it's obviously going to be Hillary or Obama. In my opinion, they're interchangeable. They're both socialists. They'll both ruin the country. So we can kind of disregard that. But the thing that we'll have a more clarification on if it's going to be McCain or Romney. And now it looks like there's a groundswell for McCain. I think both would be great. I think McCain will be a great leader. And I think if we find out that it really, truly looks like it's going to be McCain, I think that's going to be great for the market because I think he's going to be terrific for the U.S., terrific for the economy.
All right. Thank you for that democratic response, Gary B. Peter, sometimes, though, uncertainty is better than certainty for Wall Street if it doesn't like the outcome. Do you think Wall Street will like this one?
Well, I think that's the problem. There is some certainty here. We're pretty certain that one of these guys is going to get the nomination on both sides, and I don't think any of them are going to be good for the market. I don't think the Republicans, unless for some reason we manage to nominate Ron Paul, I don't think any of these Republicans has a chance of winning against either of the Democrats because we're going to be in a very severe recession by the time the election comes around. And unfortunately, the mainstream candidates have embraced the Bush agenda and the Bush economy, and I think they're going to get blamed for the recession, and I think they're going to, have to deal with it at the polls.
So you're a bear on stocks and a bear on candidates, all of them. Okay. Bob, do you think that the Super Tuesday showdown will mean good things for stocks?
To me, it's getting fairly obvious it's going to be President McCain. We don't see a big recession. There may be a technical recession. The stars are aligned correctly for the market. You got the Fed. You don't bet against the Fed. They've never been right when you did bet against the Fed. You have price-earnings ratios and the quality of down to 15.
Means the prices of stocks
right.
and price tags are cheap.
They're down to 15. There's tremendous corporate liquidity out there. There's investor liquidity out there. It's yesterday's stories, all these write-ups. There will be more, but it's in the prices of the stocks.
Well, Toby, chances are that the race is going to be a lot clearer next Tuesday. Is that a good thing for Wall Street?
Well, whether it's Hillary or Obama, they're going to be out saying with all their money that the economy's in a deep recession, the country's way off course, and that's not good for the sort of the popular psyche, if you will. On the flip side, McCain, I love him to death. An economist he is not, is the first one to tell you that. And he is in an economic fight. I'm a little bit worried about him going against, let's say, Hillary, because Hillary has got a better rhetoric. She's sort of got a sharper deal here, and right now she sounds more like Peter Schiff than John McCain sounds like somebody who's a big bull. That being said, I think that Super Tuesday is going to be nothing yet. We're going to have another 2 or 3 months. When it becomes clear, for instance, if Obama looked like he was leading, that would be bad for the market.
Toby,
I agree with that.
Being an economist is not necessarily a quality we want in a president, okay? Okay, Scott, Wall Street hoping for a clear outcome?
Wall Street doesn't care yet. It's got plenty on its plate to worry about. I mean, we've just dropped 2,500 points from the top. We've discounted the eventual Democratic winner, if there is one, because, look, if one of them wins, taxes are going up, and it's going to be a much less friendly business environment. We know that. The market knows that, but the market doesn't care about this now until after the summer. Then, maybe once we're through all of some of these issues, maybe there will be some caring about it. But right now, market's got plenty on its plate to worry about.
Okay, Gary B., answer that one.
Well, I agree with Scott. There is plenty to think about.
You agree with me? That's scary.
But there's always that but. Every piece of incremental information obviously affects the market. This piece of information we're going to have Tuesday is huge. It will be even huger if Ron Paul is even mentioned by anyone, Peter, I'm sorry to say. But I don't think that's going to happen. And I think if people start to perceive that McCain really has a great shot, not only winning a Republican nomination, but also defeating either Hillary or Obama, I think that will be very good for the market.
But Romney is the best guy for the market because he is the
I don't
business
think
guy.
so. I think McCain, look, McCain is starting to get the support of supply-siders like Jack Kemp. He has already admitted that being against the Bush tax cuts was a mistake. I think he's coming around, Scott.
But Toby, the question here is, no matter who it turns out to be, and it does look at this point by the polls, you know, that it's going to be, that it's pretty clear, but things change at the last minute. At least Wall Street will have something to look at. It's no longer a big question mark.
Well, I mean, you were just answering one part of the small part of the question, which was who's going to run against each other. Wall Street cares about who's going to be the next president, and is the next president going to have the House and the Congress and have a agenda to throw away the Bush tax cuts, have an agenda to raise taxes against corporations, have an agenda to tax the rich. That's what we are going to be fearful of about. And if we get into the fall, for instance, and you have a Hillary going, and she's running, you know, McCain is sort of the Hillary killer. Everybody feels that mano y mano, pardon the pun there, that McCain could probably be the one who would take Hillary down. If it looked like she was really, remember, we're getting polls that she was up, you know, 15 or 20 points. Market's not going to like it.
You know what, Toby? Cheer up. You're in Arizona. You're going to the Super Bowl. Thanks for the invitation, by the way. All right.
Yeah.
That does it for the Trading Pit this week. But the fighting doesn't end here. Get your game day gear on. The annual Bulls and Bears Stock Super Bowl. The guys have winning stocks and the winning team. Check it out. We've never, I sound like Peter Schiff here, been wrong about picking the champ. Not once.